Yeah, go for it.
Okay, so good evening, everybody. I welcome you all for the second session of today's Ask Me Anything series. I would like to invite our chair, Mr. Muthu Singaram, CEO of ITM MedTech Incubator, to start the session.
Thank you, Archana. Sajid, thank you very much for joining us. It's a great pleasure. I remember me catching up with you several years ago at the Deshpande Foundation down in Hubli.
Yes.
While we both were waiting for our pickup to go to you were waiting to go to the airport, and I was waiting to go to the hotel. So it's
Right.
great to see you again. And I must thank Dash. Please convey the regards and thank you to him for asking you to do this session for us. Before we start, I'll just give a quick introduction about yourself. Serge looks after Sparta, which is the family investment arm of the Deshpande family, and he's also the trustee of the Deshpande Foundation, Deshpande Education Trust, and he's a director for Entrepreneurs for All. All these programs are run both in the United States and also here in Hubli, especially the Deshpande Foundation runs a whole lot of programs there. And of course, Serge comes once every year to Hubli at least to look at the Deshpande seminar. So that's where I first met Serge, and he's going to talk to us a little bit about how about medical investments and so on. So Serge, it's a very easygoing stuff. You don't have to, and I'm going to ask the session host, Pajista Jain. She's our incubation manager. She will just set the flow running, and then the flow is yours. So Pajista, over to you to get the session started.
Yes.
Thank you so much. Thank you so much. It's a pleasure to have you, sir, on our Ask Me Anything series, session 2. We are focusing on healthcare opportunities and funding for this session. So maybe we can have you.
Pajista, yes, I forgot to say, Serge has just woke up so early in the morning, and he's actually coming out of the United States in the East Coast. So it's a really early morning for him. So thank you very much that I got you to work so early in the morning.
Oh, no problem. No problem. I appreciate everyone. So pleasure to meet everyone. Maybe it would be helpful for me to give you a little bit of perspective in terms of how we invest globally in biotech and med device.
Sure.
We've been a forerunner of this in the U.S. and globally for quite some time now. As you mentioned, I manage the investment assets of Deshpande and both his family as well as the foundation funds, and we take a global approach to investing. The way we express our investments in biotech and med device is twofold. We have direct investments into private companies. We've had some pretty extraordinary success investing into med device over the last 10 years. In companies, in terms of all the companies have been resident in the U.S., but they've been different levels of different types of applications within the med device space. So I've been sitting on the board of 4 different med device companies over the last 10 years. And so I've obviously gotten used to the experience of understanding the process flow and the decision making that's involved in how companies decide how to allocate towards different therapies or different devices, and the FDA process, as well as going through that full spectrum from incubation of an idea all the way through IPO. So we've been fortunate and blessed to be able to work with some extraordinary entrepreneurs in med device. Secondly, we've had a relationship with Royalty Pharma. You might want to look that up after the session's done. It was the biggest IPO this year in the U.S. so far. They listed at a $20 billion valuation last Tuesday, and we were an investor in that company since 2007. Their approach is to invest in the royalty streams of 10 of the top 30 drugs in the world. Most of these drugs are critical care drugs. For example, multiple sclerosis, different types of cancer treatments, immuno-oncology, and the like. So we've been very happy with that outcome. That investment has probably given us a 7x, I think, over the last 10 years. So a good outcome. Thirdly, we invest in a number of different funds in the U.S. that focus on biotech predominantly, and to a lesser degree med device and med tech. Strategy there is to invest in both the public market in the U.S. as well as private, and to a lesser degree in China. So again, that's depending on stage. The fund that we invest in will do investments in companies that are at the seed stage, all the way through pre-IPO, and then hold on to that asset through the IPO process. So Desh's strategy, with the strategy we've been working with Desh on and with biotech, is a very important part of our portfolio. And yeah, so I think the things that you are working on in these incubators are critical. My perspective in terms of India, in terms of the opportunity set, we have a relationship with Steadview Capital in India. They had a few years ago looked at this space in terms of trying to fit the gap of funding that exists in India today between early stage biotech, med device, and med tech, and when traditional VCs will be willing to risk capital. So I think that's still a space that needs to be well served by local VCs. But I haven't seen a lot of evidence of that thus far. So hopefully that's a good overview of our approach and our strategy, and I'm happy to entertain questions from everyone.
Yeah, thank you, sir. So let me just warm up the platform by asking some of the questions that we've already been collected earlier. So with the entire COVID crisis, we've seen a lot of new emerging needs, gaps, demands coming in the healthcare industry. So what are some of the solutions that you've come across in the last few weeks or months that are sort of fighting COVID, and how do you think they've actually created impact during the crisis?
So we actually have relationships also with healthcare VCs in the US that are just partners of mine that we're not invested in directly. What they've been seeing with their portfolio companies that had already been in healthcare technology is that this is accelerating their progress, because the need to be able to access, whether it's telehealth, whether it's different types of diagnostic solutions that are coming to the fore, whether it's acceleration of treatment protocols, and as well, whether it's reusing existing antiviral treatments to developing de novo treatments. That entire spectrum has been very useful in COVID, attacking the COVID issue. Obviously, you've seen to one degree or another, different countries have done well with testing as well as contact tracing. So all those things have been ameliorative. I do think longer term, one area that I think is in the medtech space is going to be how to deal with mental health on a remote basis. This is something to be absolutely critical for the entire world, and that's an area that I think is just beginning to be developed. There have been some efforts in terms of applications to work on mental health issues, but I think longer term that's going to be something that's really critical. So in terms of what we've seen, it's less about addressing the particulars of COVID and more about developing around existing applications and existing approaches to accelerate the progress when it comes to digital access to healthcare.
So some of the startups have already been working on digital health for a very long time, and they've not been very successful for various reasons, because of probably consumer behavioral change that was probably very slow early on. But now with the entire crisis coming into play, people are not very comfortable with having physical sort of consultation, and they prefer online. So how do you think that actually impacted the digital economy? And how is it going to change in the future?
I think it's had a tremendous impact. As I mentioned, we have some portfolio companies that are in the med tech space. So anything that's digital and influence has done quite well in this environment. And I think that's true across the board. Whether as you've seen, obviously, if you guys watch what's happening in the U.S. in terms of stock market, the Nasdaq, which represents technology companies, or Triple Q, which is the Invesco product, outperforms easily the rest of the indices in terms of just traditional industrial companies and everything else. So I think we've accelerated where that transition was happening. I mean, you made a good point that the average consumer was somewhat reticent to leverage a telehealth platform. In fact, most of the largest health insurers in the U.S. currently provide telehealth for free. So one of our portfolio companies that was doing, for example, in person in an employer site, dental hygienist care, they actually introduced a triage product that was telehealth, and that's been very, very popular. So absolutely, I think that's going to be the direction for some time to come. Now, if you take a look at countries that went through SARS and went through those types of pandemics back in the 2000s, South Korea, for example, we have colleagues in South Korea that, just using the example of whether it's doctors or dentists, because of the approach that those countries have taken, there's not as much adoption of the telehealth products. But I do think that depending upon how people get comfortable with these approaches, it's a natural transition and also takes a burden off of the healthcare system. We also have a number of investments in China. And in China, they've been more quickly adopt telehealth products, and that will always be the case because they need the ability to be able to service a large base. So if you look at the number of physicians that are available ratio to the population, in India, telehealth would be a perfect solution because there's not enough capacity to serve the need.
Yeah, absolutely, sir. Thank you. So a follow-up question, because you mentioned China, a lot of our components and equipments are usually imported from China, and there's been a sudden spike in terms of the pricing and because of the export regulation and restriction. So how do you think some of the startups are actually facing this, combating this challenge and sort of trying to pave way and still stay sustainable and extend their runway with the increasing prices?
Yeah, well, I do think the government. So what we're seeing here, for example, one of our portfolio companies that's focusing on producing fast stitch garments actually pivoted towards actually manufacturing hospital gowns and N95 masks overnight. So it took them about 3 weeks to change their entire supply chain and their manufacturing facilities to be able to handle that. So that is the kind of pivot that those companies have done. In terms of supplies, it's going to have to come down to the government reshoring the capacity to develop these products, these inputs for manufacturing into India. That's going to be critical. We're seeing that now with a lot of companies that are thinking about how to reorient their supply chains. And those are larger companies, so it's unfortunate for the smaller companies a little bit tougher. But larger companies have been reorienting their supply chain so that they're not dependent upon just China, for example, because longer term, as you can see in the world, there's going to be a continuing spread, and hopefully that means more innovation. So the way I look at these trade wars and the issues between the U.S. and China, to me, that's not necessarily a bad thing because that will force innovation in both camps in terms of bringing more access to products at a cheaper price and developing it at a better level. So.
Absolutely. So that's probably survival of the fittest sort of a situation where you have to start producing yourself while you can't really, seek or source resources at this point. So moving on to understand the kind of portfolio companies that Deshpande has been looking at, and what are the key parameters that you would look at when you're looking at a startup. So it could be customer traction or things. What would be your key areas that you would usually evaluate?
Well, depending upon the domain. So, for example, with biotech or med device, our approach has been to work with serial entrepreneurs or folks that are coming to the table with a nice pedigree of co-investment partners that come from that domain area. In terms of biotech, obviously, if you're investing early, there is no product. It's more about the idea, the therapeutic area. We have resources to us that have experience in virtually any therapeutic area that I can tap and say, hey, take a look at this. Is this a de novo approach from a molecule perspective or protein? Does it make a lot of sense to you? Is this be something that you'd be wanting to invest in? That plus the team is going to be the key. And then the third leg of the stool is co-investment partners. When it comes to more mature companies that are in, for example, in med device or med tech, we will invest in those companies on the same basis, just taking a look at the market opportunity, and that's actually really critical. One of the things I've seen a lot of early stage biotech and med device entrepreneurs, they may have a good idea, but they've not had the benefit of working with people that have commercialization expertise to really think about the market opportunity and the viability of the moats that they're trying to develop around that product. And that's going to be critical. So in any domain, it's really understanding, with the biotech, for example, it takes you anywhere from on the early side, 5 years upwards of 10 years in order to actually get a drug to market through an FDA process. Med device is a little bit shorter if you're able to go the 510K route, or if you don't have to do a PMA. And then with med tech, it's a quicker piece. But in terms of really understanding, the thing that I've seen from the startups that are coming from India in this domain, what they haven't spent enough time on and had the benefit of is working with somebody who understands how to commercialize within that market domain. So the sooner you have access to people that understand how to commercialize and can really give you some honest perspective in terms of market opportunity, that then leads itself to investors. If the market opportunity is not big enough, it's difficult to attract capital.
So absolutely, sir. So most of them usually get caught up with their idea itself, and they don't really look at the commercial part because they're deep scientists or technologists, those who are working in the medtech space. And the other reason also is possibly because they don't understand deeply the dynamics of the healthcare industry itself. For example, how would you differentiate between a customer and a user? Because that's very, very different when it comes to healthcare industry. You're not really selling to a customer, you're selling to a user who will rather.
Yeah,
so
just to follow up on that point, you made a critical point there. Understanding who's going to pay you is very critical, because sometimes you might have a very interesting innovation that you can actually get through an approval process, or you can bring online if it's medtech. But if you don't understand who's paying you, there's a real severe limitation there. And I've seen some entrepreneurs that have had some very, very good ideas come to the table, but they can't answer the question of who's going to pay them, and their startups have not progressed as a result of that.
So most of them are usually targeting the hospitals, and it essentially is a B2B market. So how do you think they can target the hospitals? Because hospitals essentially also have to look at how they can improve efficiency, or also see how it's going to be commercially viable for them also. So how do you think they should actually pitch to the hospitals?
On that basis, there's a specific pain point that the hospitals are trying to remedy. If you're able to describe, here's how I understand the issue that you're currently experiencing, here's our solution, and then work with them on a pilot basis to see if they can introduce it. I've seen that coming from the US to India, particularly with some of the larger hospitals, that entrepreneurs here have been able to pitch medtech and as well as devices to the Indian hospital market on that basis. They're really just looking for, I mean, a lot of the hospitals in India also they are focused on trying to find the innovation that I've seen from the US. I don't know what the reception is in India when it comes to local entrepreneurs, but I do know that from the US at least, I have seen some people have success, particularly with pilots, and then it just becomes down to making sure that the economics are well developed, so that there's a viable kind of move toward commercialization and scalability for the startup.
So thank you, sir. So we have some questions posted by some of the startups on the chat box. I will read it out. So there's one startup working on advanced ventilators with AI technology. What kind of opportunities would they have right now? Because people would be looking at more cost-effective solutions. So how would advanced ventilator with AI technology actually serve the market right now?
Well, I think longer term, because that's going to, with the AI component, would be interesting to understand is what sort of data sets are they working off of today, or is it a question of that you have a startup that has algorithms that are ready to start processing data and then use that data in order to create a more advanced ventilator system. So I think it's going to be more of a question of longer term. It may not be something that is going to address the local market because of cost, but longer term. Would that be something that'd be useful? Because you have to train the models, so it depends upon if they already have training data, then that could be interesting in terms of a data point for other providers, or if they have to train the algorithms with data, then how long does that take to actually get a data set to demonstrate the power of the algorithms?
All right, Lokesh, has that answered your question? Would you like to expand on that question? Okay, while we wait for him, we'll go to the next question. We have a question from Arun Kumar Ramasamy. He's asking, what are the additional requirements that the international investors look for when they're investing in Indian startups?
Well, I think it's, just as it's true with any company, they're really just looking for, do you have some differentiated idea? Are you creating a new market? Are you incrementally improving a market? What is the market opportunity? The team, in terms of, do you have the right type of team with the right type of skill set around the table in order to commercialize the product? And then what's the market size, right? So it's really just looking at it from an India perspective. Is it a market that's just going to be addressing the Indian market? Is it an opportunity that there's some great technology being developed in India that's application in the US? What's going to be the approval time frame? How much capital is going to be needed in order to take the company from where it is today to being able to commercialize its product? So all those inputs are there. It's nothing. I don't think there's any great companies in India today For example, if you look at Bhachu's or you look at Udan, there's a lot of companies that are getting funded by foreign capital in India without too much problem, and particularly at high rates. So foreign investors are looking for scalable, large opportunity set companies. That's why a lot of capital has flown into China. If you look at companies in Southeast Asia, same thing. They're looking at right now e-commerce technology companies. So if there's a technology angle, obviously that makes it more scalable. But having said that, I do think that finding ways, particularly in India, what I've seen is, at least some of the startups that I've seen, they are focused on too many therapeutic areas or too many diagnostic solutions versus focusing intently on one or two and then trying to get those to market, as opposed to creating a wide range of different options. That, unfortunately, that may work longer term, but it sends a message to an investor that there's not enough focus on a particular solution that they're trying to address. Understanding that longer term, there may be a platform opportunity, which makes it even more attractive, because there should be IP there, intellectual property, that could be very interesting for an investor in terms of long term. But I do think that initial focus on one or two therapeutic areas or applications, and then expanding, and with an understanding that longer term you can expand, is a better approach than focusing on multiple different shots on goal and not then having the focus in order to get something done.
Yeah, absolutely. So I think Lokesh's question was, he's working on advanced ventilator with remote control for COVID patients. That's one of the features, and also has some other interesting features like smart LED, ENT headlights, and ENT workstation for COVID documentation. So as a bundle of package or a bundle of solution, do you think it'll be sellable for different markets in the world?
Yeah, I think that's a good question. I've heard, just in terms of what our inputs we get from our biotech partners, is that, as well as public healthcare officials, it's not clear that ventilators in general are, once people get onto a ventilator, depending upon the country, that's usually, has not been a lot of survival rate thereafter. So I think the question right now that still is out there, unfortunately, with COVID is it a respiratory disease, or is it a respiratory and vascular disease? And depending upon how that question ultimately gets answered will inform how critical it is longer term to having access to ventilators. It's been a very not clear area in terms of understanding with COVID in particular. I think longer term, what's being described as a product does make sense, absolutely, because that innovation has to happen. There should be one of the issues, obviously, for healthcare workers has been their inability to be operating in a safe mode away from the patient. And I do think the way that hospitals in the future get, particularly when it comes to pandemics, being able to isolate yourself from the patient is going to be absolutely critical. So I agree that approach, it may have, if that technology is transferable from ventilators to other types of parts of the treatment room, for example, that could be interesting longer term.
So I'm going to move to a very interesting question on how US has approached the pandemic and how India has approached. So in India, we've actually gone through a complete lockdown for probably several series, lockdown 1, 2, 3, 4, 5, unlock, and then again get locked again. So we're currently under lockdown in Chennai, but US has a little different view on how things are being handled. So there was no real lockdown there, and there was mostly an imposed lockdown. And because lockdown is definitely creating a great impact on the economy, and especially on the consumption. So how do you think US has managed that in comparison to India, or vice versa?
So I think context is the most important thing in that question. If you look at the countries that have thus far, and I think for context, it's very important to remember one thing. I was in China in November of last year, in Beijing, and then also in Delhi in the middle of November. Before I went to China, my wife, who manages immuno-oncology pipeline at Merck, so Merck, you guys are probably familiar with Merck. It's one of the larger pharma companies in the world. She manages part of their immuno-oncology pipeline with Pfizer. She had told me that her colleagues in China had told her that that there's some sort of strange flu going on right now. So it's probably not a good idea to come to China in the next few months. Fast forward to January, my investment colleagues in China and Hong Kong told me that there's this COVID thing is going to be devastating in the West and in densely populated countries that operate on a more democratic basis compared to China. And now you see today, this is the case. So whether it's India or China, I think India or the U.S., the most important thing is my colleagues have told me that in order to move from where we are today to about a year from now, whenever the vaccine's available, or at later end of 2021, testing and contact tracing is going to be critical. As Muthu and I were talking about when we first started the session, that's going to be very difficult in India, just given the population density. The U.S. has taken this approach to incrementally by state lock down and then open up again. And now you're seeing in Texas, Arizona, Florida, California, where it's not working well. So even in fact, in Houston, Texas today, they're almost at capacity with their ICU beds. So there's a balancing act between the economy and public health. I do think that the more rational approach longer term will be that people that get sick, you try to quarantine. If you start to see outbreaks in small parts of an area, so rather than doing it in the entire country, you have to do it by area, geographic footprint, and then institute less social distancing, less distant social interaction, more social distancing, wearing masks, and then hopefully the opportunity for treatments that at least ameliorate the situation are going to be coming on sooner rather than later, toward the tail end of the year. But I don't think the U.S. is doing it more in a haphazard fashion right now. I think the most important thing is that governments in general provide facts about the virus versus political positions on the virus. And so I don't think the U.S. has done a good job of that thus far. But I do think it's because there's always this balancing act between the economy and public health. But I think if people are honest and genuine about here's how the virus works as far as we know today, here are the steps that each society can take in order to start to open up their economies in a responsible fashion, and then the people that are most at risk, those people should continue to quarantine. So meaning, the risk factor is over 65, at least in the U.S. Comorbidities, if you have comorbidities, that's to continue to stay in the lockdown type of mode if you can. I mean, obviously these things are easier to say than do because of the economic implications, but you cannot shut down an entire area. That's not going to happen again. The entire countries are not going to shut down again. You might have regional, city type of lockdowns, but again, it should be in a more prescriptive fashion than it's been done today.
Absolutely. So I think we've seen how different countries have handled the entire situation. So how do you think the trend of funding is going to go forward or downward in terms of startup funding, in particular in the healthcare industry? We've seen some sort of a vacuum right now with the funding from investors, even though the government is doing a lot to sort of support COVID-related solutions. How do you think the investors are going to react post-pandemic as well?
Yeah, so I think again, it's going to be area by area. I can tell you in the U.S., two of the funds that we're invested in have raised combined, $600 million to invest in the last. More than that, $800 million in the last 2 months. 800 million, right? And that's a drop in the bucket in the U.S. in terms of biotech investment. So we're also seeing startup funds, so new managers, new relationships that are raising capital, and these investors. So these funds have raised anywhere from, some startup funds have raised about $20 or $30 million to deploy, upward of $200 or $300 million. So there is a lot of interest in the U.S. in biotech. My question is, like in India, the venture capital community does not have the sophistication to invest in biotech and medtech and med device as much as we do over here or in China, and that's the limitation. So it's just a lack of expertise, and it is a lack of interest. So I think that the ecosystem that you are creating with your incubators, that needs to be supported more by local capital and more risk capital, and then that will once people start to see results in terms of good commercializable companies with large market potential, because there's an extraordinary amount of talent in India. There's no question about that in terms of being able to do these things. Question is, how does the ecosystem get better developed so that there is that opportunity for startups to participate in the commercialization of their ideas.
Yeah. So just a follow-up question to that, when do you think the economic activity will return to how it was before pandemic? Most of them are suggesting that it's going to be the first quarter of 2021, while some of them are telling that it's going to get extended to the quarter of 2022. And while the economic activity is going to be sort of slow, it's definitely going to sort of affect even the startups. So what is your take on that? What is going to be the revival strategy to bring everything in place?
So I think, again, it's depending upon who you talk to. I follow some of the largest investors in the world. We have a long-term relationship with JP Morgan. You might be familiar with the name KKR, Apollo, Blackstone, BlackRock. We have relationships with all of these funds. Depending upon who you talk to in that realm, the attitude is that either we'll start to see a 80% roughly return to normalcy in Q1 of 2021 all the way through beginning of 2022. That's the different range. I do think because right now in the U.S., if I take the U.S. for example, there is a strong impression that we're no longer going to be seeing a U-shaped recovery or a V-shaped recovery. It's going to be a W. And what that means is that because what we're seeing, for example, today in Texas, Arizona, and California, that you're going to see a diminishing, the current uptick in terms of economic activity is going to subside. In India, there were 122 million people, I believe something in that realm, that were placed in unemployment as a result of COVID, and roughly 20 million of those people have come back. But they've come back into, that's not the same. It's not the same ratio because there's a lot of more skill positions that were lost. Whereas now what's coming back are day laborers and job hawkers and that type of thing. So in terms of, the only thing what startups can focus on is absolutely minimizing cash burn, focusing on what you can do to do that, and try to continue to make progress on that basis. But I do think it's going to be up to the government to continue to provide support in the same way they have to do it in the U.S. for the people that are under-resourced from a capital perspective.
Yeah. An extension of the question again is some of the regions or countries will probably be able to revive very quickly, and they'll probably be functionable and also taking an upward turn. But some of the regions are going to take some time. So what do you think are the regions you see that will be the best investment opportunity for the startups? Is it going to be India, Asia, Europe, China, US? Which of these regions do you think is going to show that sort of improvement?
So in terms of, when you say in terms of for the startups, you mean in terms of markets? Yeah,
investment opportunities for startups.
So right now, so as I said, so in terms of from an investor perspective, capital's still going into India. Capital's still going. I was on a call with Lightspeed India. You might be familiar with the fund Lightspeed or Sequoia. Both of them have raised money this year that are India targeted funds. So that capital's there. The issue is that it's not necessarily focused on this particular space. So I think that's the question in terms of how capital comes into this domain. Opportunity, same thing in the U.S. Funds are raising a lot of capital currently, both in venture capital early stage as well as private equity. China, same thing. In terms of recovery of economies, China is heavily dependent upon their export market. So that is going to be a challenge in terms of that revitalizing that. They have a solid internal market in terms of dealing with their consumer needs, but they do not have a vibrant export opportunity set right now. So I do think that, I think the base case scenario is that the U.S., for example, is only going to be 80% of its 2019 number in 2021, based upon where we're seeing the projections of the virus and the impact it's having today. I mean, unfortunately, the U.S. is probably having its highest numbers of COVID today, right? After going on now 4 months. So I do think it's going to be a long-term thing. I think but I do think that the important thing is to do, and thinking through all this, is that this is a once in a lifetime opportunity, particularly in the U.S., between the impact of the virus, and then we've also have this realization of the amount of racism that has been systemic within our society. Those two things in combination are going to present amazing opportunities for entrepreneurs. In the realm that you are operating in terms of med tech, med device, and biotech, I think there's tremendous opportunity. Question is, how quickly can India develop the investment expertise in order to fund this activity so that there's more risk capital available to invest in your activities?
Yeah. So you mentioned that it's going to be a long-term thing, and it's just not going to get over in the next few months or probably a year. So what should be the kind of approach that startups should be looking at? Should they pivot if they're not working in any COVID-related or any nearing COVID-related solutions? Should they pivot to something which is completely COVID-related to be able to get some business, or should they just stay put with their current idea? Because if it's going to take like 2-3 months, then extending the runway is going to be hard.
No, that's a great question, and this is something that a lot of our portfolio companies have wrestled with. Because even though in the short term COVID is now currently the focus, it's not going to be the focus after whatever time frame you can pick. Whoever's got the right answer in terms of whether it's middle of next year or toward the tail end of next year, the focus will subside at some point, and then so you don't want to overly tilt your business towards COVID. Now, if there's an opportunity in the short term to generate revenue without having to do too much to your business model, that's not a bad idea. But do not pivot your business totally towards COVID, because then you're going to miss the opportunity set that exists with your existing business where you're creating some interesting value proposition. So focus on the value proposition you create. Having said that, you can certainly focus on revenue opportunities within COVID, but don't get too distracted by COVID, because it is a short term thing. And if there's interesting innovations that, for example, the gentleman that was talking about the ventilator, that remote type of sensing technology, those kind of more remote applications may have broader applications throughout a market that's above and beyond what happens with the ventilator or with COVID.
Yeah, so we also got this question asked by many startups, and we were like, multiple people gave multiple sort of solutions to this. So some of them, to sort of keep themselves sustained, have looked at creating very nearing solutions. For example, one of the startups working on virtual reality has moved to a software platform where they can use their platform for social distancing. So they've actually slightly pivoted their idea to stay sustainable. At the same time, they're still focusing on what they're really working on. We have a question on the chat box from Siddhant. He's asking, is Deshpande Foundation looking at any active programs focused on COVID-19 related solutions right now?
Well, we, with our foundation in Hubli, we've been teaming up with Boombox in terms of providing food and other types of supplies throughout the local community, and that's been a great innovation. Also, the Deshpande Foundation, through the DET program, through the Deshpande Educational Trust, has been providing masks and other types of COVID-related equipment. So that's been our focus in terms of actually being able to respond and have our, even with our startups at Sandbox Startups, there's been opportunities there to work on different types of innovations in the same way. But the focus has always been not too far of a pivot. How do we leverage the existing ecosystem to respond to the need, but at the same time being able to maintain discipline when it comes to existing programmatic activity. But certainly have been actively participating, ensuring that we're trying to, with all of in our community in Hubli and Dharwad, trying to ensure that people are following proper protocol when it comes to social distancing and masks and so on and so forth. So that's been a very active effort on the Deshpande Foundation's part.
We have another question. So the question is, most of them, it is estimated that investment in B2C startups in India have been increasing in the last few years. And do you think there's going to be an upward trend or a downward trend in the days to come? Is B2C going to still prevail?
It's interesting. I've actually seen the trend going toward, at least in terms of foreign investors, B2B, particularly when it comes to e-commerce or to enterprise solutions. But having said that, No, there's. I think if at the end of the day, the consumer need before the crisis happened, one of the big challenges in India was that the small medium business community had been under some pressure, and obviously the virus has now compounded that problem. I do think that great entrepreneurs with solutions to the average person's problems within the Indian context is absolutely going to be vibrant. Funds are raising a lot of capital to be able to invest in companies that are doing that. So I think that's always going to be an upward trend. India has got fantastic demographics. The median age, I think, is 27.4 years, if I read correctly yesterday. So compared to China, great demographics. There is a vibrant technologist and engineering demographic as well, which is very important. So I think it's less looking about what the government's going to do and more about what the individual entrepreneur wants to do with their businesses to be able to address the local context for startups. So keep focusing on that, and I think there's a lot of opportunity in there. And one of our key investment areas, even coming from the U.S. to India, is India. If we look at our overall portfolio, where we're making our bets for the next 10 years, it's India, China, e-commerce technology platforms, and biotech. So.
Yeah, I think that's some ray of hope when you said that, because a lot of startups are really struggling to see how they can sell the solutions. So like you rightly mentioned that, B2B solutions are taking a way forward and B2C a step back because of how the way the consumption patterns have also slided down. What do you think, how do you think marketing is going to play a role in getting the B2C platforms back on track?
Well, again, I think it's just more about it's being very intentional about the market that you're trying to address and their capacity to be able to see the value proposition in the product that you're offering and be able to spend money on it. It's very simple. So I do think here's a great example. Reliance has raised over, I believe, $13 billion from foreign investors in the last month. What does that tell you? So some of the smartest investors in the world, KKR, Silver Lake, Vista, Facebook, all of these investors have come in with large checks at a pretty healthy valuation for Reliance because of the Geo platform. So it's going to be interesting to see how Geo and WhatsApp how they start to try to monetize more effectively in India. That should present a lot of opportunities within the B2C space for startups. So I do think if you want to see signaling from the rest of the world in terms of what they think about the Indian opportunity, and don't forget, because of this divide that is going to happen sooner rather than later between India and the U.S., foreign investors want to find a place to invest capital. What are the options in the world? It's not Europe, because Europe's on the decline. It's not Africa necessarily, because Africa has had its fits and starts. There's not too much appetite for investment in Latin America. So where does that leave you? India and Southeast Asia, like Indonesia, Singapore, so on and so forth. So Malaysia, Vietnam, and obviously then the U.S. So it's going to be challenging for the next period of time. But I would have a lot of hope that India is going to be a very compelling investment destination for those aforesaid reasons over the next few years and for the long term. And most investors in the U.S. that are doing what I do for a living have a very long-term view. They're not looking to see what the opportunity says in the next few months. They want to take a long-term view so they can create opportunities and create returns over that period of time. What's going to be interesting to see in India in the next 3 years is there a development of the IPO market in the same way that it's developed in some ways in China when it comes to commerce, when it comes to B2C. So we'll see some of these plays that are going to come up. Again, whether it's Bhachu's or it's other types of companies like that. Can they go public? You're going to see that coming to the U.S., you could see Freshworks, Lenskart. These kind of companies might go public in the U.S. So there's some healthy amount of capital that's been deployed into India prior to the virus between Tiger Global, DST, these other large scale investors. So I do have a lot of hope for India. And I do think it's just, if you look at it pragmatically, there's not a lot of other options in the world where investors want to deploy significant amount of capital into a very large market. Only question is really the timing in terms of when does that next layer of potential customers that represent the small and medium business world, and then also consumers that are below the more affluent in that second, third tier, when do they have the capacity again to spend, and what are they going to be focused on in terms of spending their dollars, and where are they going to associate that value in terms of their spend?
Yeah, you rightly mentioned that it's going to create great opportunities for startups who are already at a mature stage, and they can probably take it to the next level and go public. But some of them are still at very early stages, or probably at ideation or early customer traction, and the investor route might not be the right route. So how do you think they can extend their runway, or how do you think they can actually sustain during these times? What would be your advice to them?
Again, it's what you described, right? It's figuring out what are adjacent areas of revenue opportunity, what are the current immediate needs that people have, and just focusing on those. Whatever is the most pain point that's tangential to their current operation, find what that pain point is and satisfy that pain point, whether it's through government that's providing some capital for a reason, or through consumer, or through business. So if there are larger businesses that need to address certain concerns that they cannot accommodate through their own internal process, either technology or personnel, look at those areas. But I think it's just looking at what are your competencies as a startup, and how can those competencies be applied to other areas that are tangential to your current business. As you're working on developing that business, what are your internal competencies you can provide to markets that are close to where you operate? So
we've also seen a huge unemployment rate, and people are getting laid off, and which means that there are also going to be a lot of opportunities to have new jobs coming into place. So what do you think are going to be some of the trends in terms of job profiles and positions that are going to come to play post-pandemic, with everything going digital?
Right. Well, I think it depends upon the trajectory. But I do think that, again, I think it's going to be true everywhere that the adoption of digital is now well cemented. And then just defining in terms of what those market opportunities are by domain, by industry, that will be better understood over time. I mean, one of the things you can do is, if you look at historical events like this, if you look at the 1918 pandemic or 1968, what was the change in activity? What's interesting is that if you look back over those times in the rearview mirror, there's actually been a lot of innovation that's come out of a lot of these events, and there's been more job creation. There's been more opportunity. So I think all those things at a very high level are true. Then it becomes a question is that, as you're seeing the trends, really spending time. I mean, one of the things that I would do right now as a startup is really understanding the needs of your potential consumer base, and making sure that you're finally honing the business that you're projecting to them in line with their needs. It goes back to our earlier part of the conversation in terms of people with some really great ideas and good intentions have not necessarily spent enough time on market research and to understand where their products and services can be deployed. Right now, I would take the opportunity so that there's that kind of dialogue happening today, so that you can either, again, whether you're talking about tangentially, if you're a very small startup, where your competencies can be applied, or at the same time, understanding where your market has evolved, getting some good feedback from those resources to understand where they think their needs are going to be in the next 6 months, 12 months, 2 years, 3 years, and positioning your business to be able to respond to those market needs as they develop. But that kind of market research, market understanding today is going to be critical.
Yeah, like you said, I think SARS and a lot of other pandemics have actually created a lot of opportunity in the past, and that's led to great internet boom and people going digital and virtual, from smaller companies to Starbucks, companies like Starbucks during Great Depression. But we've also sort of seen that some of them go under the carpet, and they're not able to survive because they're not able to raise capital. Or do you think US or EU are good regions right now for startups to look for capital investment right now? Or what could be the right time for them to reach out to them?
I think it's difficult because most investors will want to meet in person to be able to diligence an opportunity. Most investors that have the best investors in the world, their success has come from identifying the talent of the team, and then secondarily the business idea that they have, because the business ideas evolve over time, right? They are not necessarily set in stone from day one. They evolve, they mature, they progress. And that's really the pathway. So most investors are looking that I've spoken to, I'd say in the last 2 months, I would say most of them are waiting probably until the fall before they start to engage again in thinking about whether they can start traveling. But I think the cement point is I don't know that it's a good use of time to spend too much time reaching out to too many investors in the US and in Europe, unless you have a well-developed relationship and it is a very warm introduction, then that might make sense. But if it's a more of a colder type of blanket approach, I don't know that that's going to result in a good result, a good outcome. I do think it really comes down to the type of investor. Now, I have seen some of our colleagues in the AI space, for example, have been doing deals in Europe just over Zoom, but I think that's really the exception, not the rule. I think it is more about, I would spend more time with figuring out how to, again, as we talked about before, more tangential business opportunities to generate revenue in the short term while continuing to focus on your key platform and really understanding and cementing your market data points.
Yeah, I think it's very important to be realistic at this point and not really reach out do cold calls and unless you already have relationships.
Yeah, to that point, there's a book called Essentialism. If you Google it, that this author it was given to me by a few of my colleagues in the investment world who both manage over $3 billion US. So they've grown funds from a 0 point all the way up to that amount in terms of investing capital. They focus only on the things that are critical today in terms of activity. That's very important for where you are right now in terms of how you spend your day, how you spend your time, how you map out how you want to spend the rest of your time, in the next few weeks, months, and the following year, is being very objective about how to spend your time on different activities, even though there's a desire, obviously, and I completely appreciate this, a desire to raise capital and to keep moving forward, but being pragmatic about it is going to do you quite well. It'll do you a good service on the term.
We have a question from Lokesh on the chat box. He's asking, how do you think the investment is going to shape up for pharma companies, meta companies, telemedicine, therapeutic companies in the near future?
Well, in the U.S., it's fantastic. I mean, if you look at the stock market, as I mentioned earlier in the call, Royalty Pharma is the biggest pharma-related business to go public in the world this year, and they traded up almost 100% in their first week. So that kind of gives you an idea of where the sentiment is, at least in the U.S. and global investors in general. I think and as I mentioned before, there's a lot of capital being raised for biotech. The funds that we invest in have raised $800 or $900 million in the last 2 months. So there's a significant amount of interest in that area. I think, but the challenge is how does that get translated to India startups when you don't have as much of a developed seeding and early stage VC platform to provide capital there. So that has to develop over the next few years.
Just a follow-on question. Because we see not a lot of investment happening in this space, and we also see that people have to sort of bootstrap and see how they can take it forward. How do you think startups at this stage should look at grants and other opportunities or sources?
Or is there? I'm not familiar with the grant opportunity set in India. Certainly, if there are opportunities, I do think if it's anything like the U.S., that's a very long tail proposition. So again, it comes back to the cost benefit analysis around spending your time on that activity. I do think, obviously, minimizing cash, finding opportunities to generate revenue today while things start to come back to normal, and if grants are a way of doing that, that would be good. But I'm not familiar enough with how the grant world works in India when it comes to being able to raise money.
Thank you so much. Thank you so much. I think we're nearing 6:30. It's also very early morning for you. Before we wrap up the session, just a few thoughts for the startups on how you would like to take it forward, and I can hand it over to our CEO again.
Thank you for a great presentation, Serge. At this time of the morning, it was wonderful having you here. Please convey our thank you and regards to Desh for asking you to do this session. I think it was a great session, and hopefully we will be able to interact with you over the time and take your advice and to guide startups. And as you know, we also do that program at M2D2, and last year we had 3 of the startups there. This year 6 was supposed to go from India, but unfortunately with the COVID, that's not happened. We will let you know when that happens again, so we can sort of get a face-to-face interaction with the startups.
Yeah. Raj Melville mentioned to me that was going to be happening, so I'm looking forward to that. And also, Muthu, looking forward to seeing you in person sooner rather than later.
Yes. And another thing, whenever chance gets and you come into Hubli, come down to our MedTech incubator down at IIT Madras. It's a pretty good setup, and you really enjoy seeing it. We have about 40 startups working out of there now. We're not that old, we're a couple years old, but we're doing whatever we can. So I'm going to reach out to you as often as I can and continue the conversation with you.
No, absolutely. Looking forward to it. And good luck, everyone. Keep safe, and thank you for the questions, and hopefully that was somewhat helpful to you.
Yes, and thank you. See you. Bye.
Okay, bye-bye.
Thank you so much. Thank you.
Thank you. Bye-bye.